year to date, gold is the best performing asset class. I don't think many people know that, right? I mean, it's only down, it's break even to down 1% year to date.
So I know you've been a long time, gold bull, if that's a okay
Oh yeah, big
terminology.
time, forever.
And you've been waiting. You've said, hey, fireworks should come for gold. I know a lot of gold investors
Oh
waiting
God.
for those fireworks. So, how would you describe? Are you satisfied with what's gold doing? Because you could look at it and say, well, it hasn't moved much, and on the flip side, it's one of the best performing assets of the
Right.
year thus
Yeah,
far.
well, so I'm never satisfied because I want gold to be where it should be, which is at $80,000 an ounce. If you use the 1971 metrics and you look at M2 as opposed to the ounces we theoretically hold, gold should be at 81,000, which just shows you how much, they've demonetized gold and they've suppressed it and so on and so forth. But yes, your point is a good one. We were talking before we started here. I mean, people and I've got a lot of clients who are like, "Hey, Larry, inflation's raging. How come we're not making more money?" You know, and I'll get to that in a second. But the year to date, gold is the best performing asset class. I don't think many people know that, right? I mean, it's only down. It's break even to down 1% year to date. The Nasdaq's down 25%. The S&P was skirting with being down 20. I guess it's a little less than that now. The Dow's down a lot. I mean, you go through the general marketplace and it's down quite a bit. The interesting thing that goes with that, is in the past when the market was down like that, you would think, okay, well, at least bonds caught a bid and bonds were a good place to hide. Well, no. I mean, bonds are down too. TLT, the 20-year, the 10-year. And, if you've held bonds, you've lost money too. So there's really been almost nowhere to hide this year with the exception of oil and gold. And, gold is, I mean, you can't eat a negative relative performance. Let's say we're down 1%, but the fact of the matter is, that's a whole lot better than being down 25% if you were in the high flying NASDAQ. So, and I think that separation is only going to grow and persist as time goes by. To the answer to the question of why hasn't gold performed better, well, right now, we've had a very strong, Volcker-like response from the Fed, which has driven the dollar up quite a bit. And the general narrative that he's portrayed and that people have bought because it's surprising to me because I mean all these Fed people are so full of shit and everything they say is wrong and they're lying all the time, and yet there's a big part of Wall Street that listens to them and believes it. And so they're buying the thesis that I know what the Wall Street story is. It's Putin's going to be overthrown by the oligarchs who are pissed off that they got their yachts taken, and the war is going to be over. And then, the COVID supply chain stuff is going to resolve itself. And we're going to go back to a deflationary 2% environment. And all these financial assets are going to come screaming back. And you don't need gold. And that's the narrative that's causing, a lot of people to not come into gold. And, if you believe that narrative, great, then don't buy any gold. If you're like me and you look at the math and you say, hang on a second, there's no way they can get out of this box they're in without printing a lot more money. And it's very unlikely that we're going to have an immediate supply response in all these commodities that we've underinvested in for 15 years. Then you say, I'm willing to bet that inflation surprises to the upside and continues. And yes, Powell is talking tough about inflation right now, but he's got nothing. He's all hat, no cattle, and so it's gonna catch up with him, and people are going to realize, what? I mean, here's what needs to happen, Daniela, for gold to go to the moon and for Bitcoin to go to the moon. And they both are going to go to the moon. Here's what needs to happen. People need to realize a big, broad swath of investors and people who make the decisions about where to put their money need to come to the conclusion that they can never stop printing, ever. They can't. It's what Max Kaiser said. You can't taper a Ponzi. We've got a financial Ponzi driven by free money, 0% interest rates. Bernanke was the super
Right.
spreader with his 2002 speech. And, you can't taper it. I mean,
Why, why can't it go back to pre-Bernanke days,
yeah.
Lawrence? Why not?
Why can't they? Well, they
Yeah.
could. Yeah, yes, they could if they're willing to see half the country go bankrupt or more. If they're willing to have something that looks like the Great Depression,
Okay.
they could
That's the
do it.
only way.
That's the only way. All of the malinvestment they could make the dollar sound again, but all of the malinvestment would have to be cleansed, and the federal government would have to balance its budget. And think about that in the context of tax revenues would go down because everyone, in the Great Depression, 35% of the country was unemployed. So they
Yeah.
weren't paying any taxes. So
Right.
take our, let's say we have an analog to that. Take our taxes down by 35%, and then by the way, we've got all these automatic things that kick in when you have a downturn,
Yeah.
welfare,
Yeah.
food stamps, etc.
Right.
We're going
But
to
no
blow
one
out
wants
the
to go through
deficit.
that much pain. So it's like, okay, let's just keep printing. Let's just keep printing.
That's
Let's just
exactly
keep printing.
right. People, I mean, at the end of the day, the decisions are political decisions, right? So this doesn't have to be inflation forever culminating in Weimar, which is kind of what I see unfolding. It could be, sound money, return to a dollar, return to a gold standard, reset and restructure. I mean, if you look at history, that's what Roosevelt did in 33 and 4. I mean, he grabbed the gold, which was illegal, but he did it. And then he devalued, the dollar 70% against the gold. And obviously that wasn't enough because it took a while to get out of the depression. But the point is that that's one possibility. I mean, you have two choices here. You can either say we're going to clean up all these excess and make the money sound again, but the cost of doing that is going to be extremely painful. Or you can say, well, let's just kick the can again. My view is a guy like Powell, he's not thinking 5 years out. He just wants, I don't know why he took a second term. To me, that proves that he's stupid, that he took the second term. Seriously, who would
Everyone
want
says
to be in
it's a
his
job.
shoes,
Right.
given this constellation of facts, right?
Uh,
And
well,
so,
yeah, well, you beat me to the other bottom question I want to ask you because we saw inflation come down slightly in
right.
April. And some experts quickly saying, "Oh, this is we've hit peak inflation. It's all good." But you're saying, "No way, Jose," basically.
Well, yes and no. I mean, look, if you go back and you look at the 1970s, there were a bunch of waves of inflation. I mean, just so you know, the 5 year out swap on inflation is saying inflation is going to go back down to 3% in 5 years. Okay, I say absolutely no way, Jose. It was what was it, 8.5, and then it came to 8.3 last month. I mean, could it go down to 7 or 6? Sure. Is it going back to 2 or 3? No way. Absolutely no way. We've got an upward trend, and that goes back to the supply issue and the underinvestment in commodities. So I think
Yeah.
we've now entered an inflationary period that's going to look like the 70s. I remember the 70s. I was a teenager, and inflation just persisted and got worse. However, there were, it would run hard, it would back off, it would run hard, it would back off. In the 74 period, the Fed tried to tighten a bit, and inflation came down. The stock market also took a huge hit. Very similar, actually, what we're in right now kind of looks like 1974 if you go back and study it. And, it'll wax and wane, but, it took Volcker taking inflation rate or interest rates to 20% when inflation was in the teens to finally put a nail through the heart of inflation.
Yeah.
And 1%. I mean, we haven't even started yet. We got no QT and we got a 1% Fed funds rate. That's not going to do it.